Good morning, everybody. Happy Thursday. We'll get started here in just a minute. All right. Time to get started. Time to get started. All right. Good morning, everybody. Serge Berger here from thesteadytrader.com. This is our Set the Market morning call. We're going to spend the next 10 to 15 minutes going through the top things on my notepad. If you are new here, please make sure you subscribe to the channel. Very important, allows you to be updated in real time when we go live with market analysis, and also helps us to be able to continue to do this morning call. So thank you all for being here. What are we going to talk about? Well, I do want to start off with the conversation that we've been having in pretty great detail all week on gold. We will talk about silver. We got a new buy signal there. These are ETFs. One can also do this with futures, of course. We'll talk about the equity market. We'll look at Bitcoin as well. And then I do want to fold in a couple of financial stocks, particularly Goldman Sachs and Morgan Stanley. So we are going to be doing all of that here right now. Let's go. All right. First of all, let's talk a little bit about gold first, since we talked about that in real time this week. Remember coming, actually, let me close this here. We talked about this in real time earlier this week, particularly on Tuesday. I said, listen, it really does feel and look, and according to all of our measurements, including, very importantly, the Vertical X Pro, which I hope everyone is using, indicator that gold is overbought for, at the very least, a few days, likely a few weeks, potentially a few months. To give you just a little bit of an idea of what that looks like, let me just bring up again the chart of the GLD ETF, which you can see here. So if you are using the Vertical X Pro, and again, I hope you are, you can see we got the overbought signal on Monday. Meaning we were ready to start hedging long gold positions, or even going outright short on that, based on that signal. And since that signal became valid, gold ended up dropping as much as 4.7%. It's now up a little bit today, but I don't think it's over, because if you just take a look at gold and you just ignore for a minute, very importantly, the input, which is the Vertical X Pro, which tells us when something extremely overbought or oversold. Even if you were to forget that for a minute, we are seeing a historic move in the price of gold that I do think it warrants a pause here. We do think that gold will go higher over time. There's a high probability of that. We do think it's overbought, it's overshot, it's gone vertical. Any of those types of sort of nomenclatures is probably appropriate here at this point. The question, of course, is what does that mean for other things that are similar to gold? So I remain, as I was yesterday morning, we've been long gold since 2023, since the midsummer 2023. That is unchanged. I did hedge and actually go net short gold because of futures and some option stuff I did on Monday, late Monday or early Tuesday, and that hasn't changed. And I don't see any reason to change that just now. Again, I think it's going to be a multi-week, multi-month kind of thing. So that is sort of our thinking here. It is also Ticker Thursday, by the way. So if you guys have specific stocks you would like us to look at, please type them into the chat box so that we can get to them. But again, that's gold. Now, the question, of course, is what about other assets that have gold-like qualities? This is a chart that I talked about either Monday or late last week. I can't recall now here. I talked about it to clients now for some time. But what we're looking at here is the correlation of, over the past few years, of gold, which is the purple or red line, to the price of Bitcoin, which is blue. And, if history is any guidance here, we should see some mean reversion. Now, remember, mean reversion does not mean that only one asset can do something. It's also could be both. So, Bitcoin is holding up rather well. We've made, I think, a pretty big deal about that. If you're a member of Inner Circle or using the trend ruler, which is our month indicator, you saw the trade alerts being sent to you directly. But it is entirely possible not only gold will start to correct a little bit here, again, pause in the greater scheme of things, but maybe that on top of that, Bitcoin starts to catch up. And you've seen this in the past when we've had these kind of divergences where Bitcoin would start to top out, gold would start to top out, like, for example, in 2020, and then Bitcoin would take off. It's not always perfect, but there is, it is a notable divergence right now. So I do want to point that out. So that's number two, or the second thing. The third thing is really what's going on with silver, and this is an ETF, which is SLV is the ETF for that. So let me just give you a little bit of perspective on this. If you look at the gold to silver ratio, and we can just literally take GLD and divide it by SLV, I think that'll give you a good idea. We're at a point where you see we're at a pretty historic extreme. So the price of gold relative to the price of silver really hasn't seen many times before where it's reached this extreme. In fact, let me see if I can make this a ratio chart. Yeah, so now we go back much further like this. So even if we were to go back all the way, to the 1930s in this one, you can see we've reached a point here in relative terms where it is quite likely that we're going to start to get a pause in this ratio, which basically means, to again bring it back to the simplistic point, which is that likely the price of gold is overbought, right, in the near term, near to possibly intermediate term. So we're talking about weeks to months. But the price of silver potentially could go higher. It's a little weird to say that because the price of silver does have that industrial quality to it, but what we are seeing is a lot of these industrial metals, copper, among others, if you guys are part of the Heat Seeker program, we are uber bullish on that stuff. And while silver hasn't actually broken out, if you are a market rover user, then you are probably or hopefully noticing that we do have a new trend following buy signal on the market rover on SLV. So that's the silver ETF. So to me, I think there's a lot to be said for that. And I personally am long silver. It's a volatile asset, so we do need to be mindful of that. It's essentially hasn't been able to break above the highs from October of last year, but it's rebounded very nicely. And in fact, if you look at copper, the price of copper, which I keep referring to, it has more or less done the same thing. So the price of copper and silver, not surprisingly, look very similar. It's just a question of can they break out from here, or was it just oversold and now they're trying to get this back into balance. So that's really the question. So that's an extensive update on gold, good update on silver, kind of sprinkling copper in there, and of course the relationship to Bitcoin, which gets us to a few individual stocks. Now, before we get to a few individual stocks, let me just bring up the point that the S&P 500, in the off chance this isn't clear yet, it is in a choppy range here. It's a very wide range. I mentioned this yesterday with Tesla as well. The range is currently somewhere in the order of about 15%. So if you're looking for some sort of a major directional move, you better hope you're going to get a break out of this range, because otherwise you better off taking very quick trades, day trades, or trades that last a couple of days, right? Because we are in a trading range. It's a very wide range. It's amazing to trade intraday, by the way. And I'm saying this as someone who only trades day trades very selectively throughout the year. But right now is an absolute. I can't even tell you how amazing this is to day trade right now. So, and again, this comes from someone who selectively day trades, because I've noticed that there's a lot of times when it's just not useful. So that's what's going on there. So just keep in mind we're in a range, which gets us to a couple of stocks. So let's talk about Goldman Sachs. Again, if you're using the market rover, you will notice what the trend changes are there. Let me just quickly put the charts back on this so you can see this. But essentially, if you look at Goldman Sachs, not only does it have its 200-day moving average right there, it's broken its trends. I'll quickly show you this on the other chart. Give me just 1 second. Okay, so you will notice that, for example, Goldman Sachs is no longer in a bullish trend on the market rover. That's our trend tracking and trend mapping and trend following algorithm. You can see how it changed its trend from bearish to neutral to bullish in December 2023. Then the stock rallied as much as 96%, and it's now no longer in a bullish trend. It's now in a neutral trend, which is a very, very big warning signal for anyone, that is still just relentlessly bullish Goldman Sachs. These trends usually don't reverse very quickly. In very rare circumstances, they do. Usually it's a multi-month, multi-quarter, sometimes a multi-year affair where they consolidate. I don't think it's multi-year, but it could be an extended period of time. And so what we're seeing here, let me put this chart in the middle. We're seeing a situation where Goldman Sachs is reaching a very defined level. There's a lot of different ways to do things here. I don't want to give you a specific trade because everyone likes to do things differently. An options credit spread here, like a bear call option spread, would be one way of looking at it, where one would make the bet that, let's say, the stock doesn't go, let's say, all the way up here, right? Meaning we would make money if the stock were to go sideways, lower, or even a little bit higher. That would be one way of doing it. We're looking at that in full disclosure. Alternatively, if one is long Goldman Sachs and bought it somewhere in the 600s, which most people probably did, then this might be an interesting place to start getting out of it. If you have to hold the stock for some reason because you are, a fiduciary and you have to have the stock in your portfolio, then maybe writing some calls against it. That's fine. Just keep in mind you can still lose a lot of money if the stock goes down. If you want to be directional and more aggressive, put options here makes sense. Put spreads, anything like that on the bearish side. How far could it drop? I don't know. Possibly, back into the mid to low 400s is entirely possible. My point right now is more to make that I think it's finding a lot of resistance up here. So that's that. Same thing with Morgan Stanley. You can pull up that chart as well. You'll see the same exact situation here. No great surprise. Obviously, broker-dealers, investment banks, et cetera, acting, U.S. ones, acting in kind. So that's that. Regional banks look the same. Then Devendra wants to look at MSTU. No clue what that is. Oh my God. Okay, I keep saying this, folks. Like, this is just really important to understand. Please understand, this is a levered MSTR ETF. First of all, you're dancing with the devil, and I mean this respectfully, number one. Number two, you cannot analyze an ETF like you have to analyze the underlying asset. Can I get a yes if that makes sense, folks? Like, this is so important. There's so much misinformation out there right now these days because we live in this gambling bubble where people are not being taught the absolute basics. Like, this is an ETF. If you want to trade this ETF, and dancing with the devil, I'm going to say it one more time, you have got to analyze the underlying asset. And in this case, MSTR, which is MicroStrategy, is actually not even the underlying. The underlying actually really is Bitcoin, right? So you've got to understand this. If you don't have a solid handle on what the underlying is, you are going to blow up your portfolios. You will never be successful, right? So this is really, really, really important to understand. The underlying for a crazy levered ETF like that is not even MSTR, which is the stock, which is levered to. So you need to think about, if you're going to trade that ETF, you have to really think about what you're doing. Not only is Bitcoin a very, very volatile asset. Okay, this is how crazy this is. Not only is Bitcoin a very volatile asset, it's got a 50 vol-ish. MSTR is a levered play, MicroStrategy, to play Bitcoin. So you're playing a 50 vol asset, which is Bitcoin. Your MSTR is a leveraged way of playing Bitcoin because it's leveraged at taking up credit. And now you're using a 2 or 3 times levered ETF to play that. You're not even dancing. At this point, you're in bed with the devil, right? Like, that's where you are. So if you don't mind that kind of ETF going to zero or to like losing 80% possibly overnight, I know that it hasn't happened and it may not happen, but you need to understand what the risks are that you're taking with that. There's very little reason to take that amount of risk, right? I understand a lot of people chase that stuff for reward, and I'm, quite frankly, we received a new momentum buy signal in Bitcoin, right? So IBIT. But you need to understand what the bubble like is that we live in right now. Like, I mean, it's very sincere. I'm trying to help you, not trying to scold you. I'm really trying to help because I'm so concerned when I see people talk about this kind of stuff. It shows me that we are nowhere near, absolutely nowhere near the end of this this bubble. Even as a day trading instrument, Fabian, you are absolutely playing with the devil because you cannot control that leverage. If at the very least you use an option and not a ZRDTE option, because those can go to zero that day. When you guys haven't seen when stuff unwinds, it'll be a donut, it'll be a zero. So do these kind of things by all means, but don't use those instruments. There's way more sane ways of doing things. Because if you use something like a 3 times levered or whatever MSTR ETF or a ZRDT option, you need to understand that you are gambling. You're not actually trading. Why? Because of the very definition of it. Because the money you're putting in could go to zero. If at least you use an option that expires in 30 days, right, it's not going to be worth zero even if it goes against you. It might be worth a lot less than you bought it for, but it's not a zero. So the definition of gambling is essentially all or nothing, right, in that sense. So just keep that in mind. And I understand there's a huge gap of education out there that's not being covered because the 25-year-old pimple-faced YouTube trader that's making amazingly good quality YouTube videos, but absolute shit in terms of information, like actual, like the actual knowledge, because he's 25 or 30 or 35. He knows nothing. He's never even really seen, he's seen nothing, right, in markets. Like, it is so ridiculous that I have a hard way to contain myself. So just kind of keep that in mind. And I'm going to, at some point, make a video on ZRDT options, which are actually a really good tool, just not for the trader. They're a really good tool to make a bet on a specific one-day event to hedge it, right? They're great tools for that. They're not a very good tool if you actually are wanting to trade and take a bet that's got decent reward to risk. If you don't mind about losing the entire premium on a ZRTT, and if that's what you want to do, totally fine, right? But that's not trading. That is the definition of gambling. So you need to understand kind of how this comes down. And then there is another question on, who is this? USAS. Okay, so again, good question, but again, understand what we're looking at here. So if you're going to do an analysis on this, and by the way, like if you're flocking to a penny stock on gold, again, you're kind of missing the point, and I mean this respectfully, because it shows the mindset of people right now. We still live in this giant gambling bubble. So USAS is essentially a penny stock on gold and silver. I personally, it's holding up very well, but I don't actually know where the sensitivity is, because based on all the analysis we did before, because again, you have to do the analysis on the underlying asset. It's very important. I'm not sure if this ultimately is going to be more sensitive to gold or silver. And given what I just mentioned before for the first 5 or 10 minutes, that those two things are diverging or potentially diverging, I'm less comfortable in something like this rather than being right now actually a little bit net short gold. I have a lot of gold long term. I'm just net shorted with futures as a hedge. I'm really not quite sure. So for me personally, this is not necessarily something I feel the best reward to risk on right now. So anyway, folks, I'll see you guys over in Trade Ops. I'm sure we're going to have another great trading day today. Thanks for being here. And we will see all of you back here on Monday when it's the next Set the Market morning call. Remember, we don't do this on Fridays because I need time to do a lot of research and manage our portfolios. So we take Fridays off. But any questions, as always, please let us know. Again, please subscribe. Please give us a thumbs up, stay informed, educate yourself, don't gamble, trade and invest, yes, but don't gamble. See you guys soon.